Have you ever wondered about the truth behind taxes? Let's start with the income tax. It's a pillar of fiscal systems worldwide, a mechanism designed to distribute the burden of supporting public services. It's based on a principle of progressivity. The more you earn, the more you pay. Sounds fair, right? Well, that's the deception. You see, the income tax system is often sold as an equitable way to ensure those who earn more pay more. It's a nice idea, but the reality is a different story. The wealthiest individuals, those who arguably should be contributing the most, often find ways to sidestep their fair share. They exploit tax loopholes, use deductions, and sometimes engage in creative accounting to minimize their tax liabilities. The result? A significant portion of the tax burden is shifted away from the wealthy and onto those who can least afford it. Low-income taxpayers, who are least equipped to navigate the complexities of the tax code, often find themselves shouldering a disproportionate share of the tax burden. They pay a significant percentage of their income in taxes, sometimes struggling to make ends meet as a result. So what we're left with is a system that, while theoretically progressive, often operates in a regressive manner in practice. The weight of the tax burden is not borne by those most able to afford it, but by those least able to bear it. The deception of income tax lies in its proclaimed fairness, but the reality is far from it. The rich exploit the system while the poor bear the burden. It's a twisted game where the rules are written by those with the most to gain, leaving the rest to pick up the tab. So, the next time you hear about the progressivity of income tax, remember the hidden deception. The system isn't as fair as it seems. It's designed to benefit those at the top while those at the bottom are left to foot the bill. It's a deception that needs to be unmasked, a truth that needs to be told. Moving on, let's talk about a tax that affects almost every purchase you make. The value-added tax, or VAT. This is a tax that's applied to the cost of a product at each stage of its production, right from raw materials to the finished product you see on the shelves. On the surface, it sounds pretty straightforward, right? But let's dive a little deeper. The trickery of VAT lies in its regressive nature. Now, what do we mean by regressive? In the world of taxes, a regressive tax is one that takes a larger percentage from low-income people than from high-income people. Yes, you heard it right. It's the opposite of progressive, which is what most of us think a fair tax should be. Let's take a closer look at how this works. Imagine two families, one with a high income and one with a low income. Both families need to buy the same basic goods and services, food, clothing, utilities, to live. But the lower income family spends a larger proportion of their income on these essentials. So although the VAT rate is the same for everyone, it ends up taking a bigger bite out of the lower income family's budget. Now, some might argue that VAT is fair because it's a consumption tax. You only pay it if you buy something. But here's the catch. The essentials that we need to live, like food and utilities, they're not optional purchases. So for lower-income families who have to spend a higher proportion of their income on these basics, VAT can be a significant burden. So beneath the simple mechanism of VAT lies a regressive impact. It's a tax that, while appearing to be a level playing field, ends up placing a heavier burden on those less able to bear it. And that, my friends, is the trickery of value-added tax. Now let's delve into property taxes, often perceived as fair. Property taxes are a staple, and they're based on the value of the property you own. It's a tax that seems straightforward and equitable, right? Because it stands to reason that those who own more valuable properties should pay more in taxes. But here's where the illusion comes into play. The value of your property is not a fixed number. It's not like checking the price tag on a piece of clothing or the sticker price on a car. Property value is determined through an assessment process, and this is where the deception lies. Assessments are supposed to reflect the market value of a property, but they can be influenced by a myriad of external factors. Think about it. Two houses in the same neighborhood with the same number of rooms and similar square footage can have wildly different assessed values. Maybe one has a better view, or perhaps the other was assessed during a real estate boom. These subjective factors can lead to significant disparities in the property taxes paid by similar homeowners. And let's not forget about the appeal process. If you think your property has been overvalued, you can appeal the assessment. But this process can be complex and time-consuming, and not everyone has the resources or the knowledge to navigate it effectively. So those who can afford professional help or who are more familiar with the system have a better chance of successfully appealing their assessments and reducing their taxes. The result? The property tax, which on the surface appears to be a fair way of distributing the tax burden based on wealth, can end up being anything but. This is because the system allows for disparities in property valuations, which in turn leads to disparities in the taxes paid by homeowners. So the fairness of property taxes is marred by the inconsistency in property valuation. It's a subtle illusion, but it's an illusion nonetheless, and it's one that can have a significant impact on what you owe every year in property taxes. Next, we'll look at a tax that often flies under the radar: financial transaction taxes. These are levies placed on the exchange of financial instruments like stocks and bonds, derivatives, and other securities. They might seem straightforward, but the reality is quite the opposite. Here's why. The world of finance is a labyrinth. It's a complex web of transactions crossing borders, currencies, and regulatory systems. This complexity is where the deception lies in financial transaction taxes. They're often touted as transparent, a small percentage applied every time a financial instrument changes hands. But the intricate global nature of financial transactions makes monitoring and regulating these taxes a Herculean task. Think about it. Financial markets don't sleep. Transactions happen around the clock across different time zones in myriad currencies. Each transaction is a tiny thread in a vast tangled tapestry. Tracking each thread, ensuring that the correct tax is applied and paid, is not only daunting but also near impossible. This complexity provides a fertile ground for avoidance. Financial actors, particularly those with substantial resources, can exploit this obscurity. They might route transactions through jurisdictions with lower tax rates or even no financial transaction taxes at all. They might engage in high-frequency trading, where millions of transactions are executed in fractions of a second, complicating tax calculations and enforcement. These maneuvers mean that many financial players, particularly the most affluent, can end up paying less than their fair share. The average taxpayer, without the means to engage in such sophisticated strategies, bears the brunt. So the supposed transparency of financial transaction taxes is obscured by the complexities of the financial system. It's another example of how the reality of taxes can diverge from the ideal, and why we need to keep questioning, keep probing to ensure that our tax systems are as fair and equitable as they can be. Finally, let's talk about pollution taxes, often seen as a tool for encouraging sustainable behavior. These taxes are designed to make the polluter pay, sending a clear price signal that should, in theory, lead to less pollution. Sounds straightforward, right? But here's where the deception comes in. Pollution taxes are typically levied on big businesses, the major contributors to pollution. However, these businesses often find a way to pass the cost of the tax on to consumers, effectively sidestepping the intent of the tax. This cost-passing practice is a deceptive move that undermines the effectiveness of pollution taxes. For instance, a coal power plant might be required to pay a tax for every ton of carbon it emits. But rather than reducing its emissions by switching to cleaner energy sources, it might simply increase the price of the electricity it sells. This means that the consumers, not the polluting company, bear the brunt of the tax. The real deception lies in the fact that these businesses can continue their polluting ways without significant financial consequences. The consumers, on the other hand, are left with higher bills, while the environment continues to suffer. In some cases, pollution taxes can even create a perverse incentive for businesses. They may choose to pay the tax and continue polluting rather than investing in cleaner technologies or practices. In this way, pollution taxes can inadvertently become a license to pollute rather than a deterrent. This is not to say that pollution taxes are inherently flawed. When designed and implemented correctly, they can play a crucial role in driving sustainable behavior. But as it stands, the deception in how they are often implemented allows big businesses to evade the spirit of the tax, passing the cost on to consumers and continuing their polluting practices. So, the supposed incentivizing effect of pollution taxes is undermined by the cost-passing practices of big companies. This deception does a disservice to the environment, consumers, and the very principle of polluter pays that underpins pollution taxes. In conclusion, behind every tax lies a deception. Income tax, often hailed as a pillar of fairness, conceals the illusion of its progressivity. The value-added tax, though seemingly straightforward, hides a regressive impact. Property taxes, while perceived as equitable, are marred by the deception of property valuation. Financial transaction taxes, despite their significant role, are obscured by a lack of transparency. And let's not forget pollution taxes, where the facade of environmental compensation is all too often just that, a facade. These deceptions call for a critical reflection on our tax system. We must fervently commit to reforms that promote greater fairness and transparency. Each tax, each policy, each law should be scrutinized, analyzed, and understood for what it truly is. Only by unmasking these deceptions can we truly understand the mystery of taxes and make them a fair and effective tool for financing the common good.